The two charts that I'll be illustrating today are part of a discretionary trading system designed to help you avoid bad entries, especially at the open and throughout the trading day as well. Today we'll be focusing on both charts. I'll be explaining to you what the algorithmic signals are all about, how to use them, and I'll give you a little bit more color in regards to how to blend these together so that you could have a successful trading day, whether you're trading the open or you're trading intraday, as I do myself. Each one of these signals has been carefully crafted for the actual symbol it's on, and no two signals are the same. These are not out-of-the-box algorithmic signals. These were custom made out of years of research and development, and each has its own unique function. So let's dive in and go ahead and get right to it. All right, the chart that you're looking at is a 1-minute chart of the Qs, QQQ, and this chart, along with the other chart of the NASDAQ 100, play a critical role in helping you determine your entry and exits, as I mentioned earlier. Now, I use these both myself, and let me just tell you how I use them. Real simple. This yellow line that you see right here, okay, this is not a moving average by no stretch of the imagination. This line, the reason it's actually going sideways right here is that it only tracks the price when there's sufficient volatility in the data spectrum right there to actually move along with the price. For example, we just had a sell-off earlier today, right around, I think it was 12:50 in the afternoon. And the signal right here, the yellow line, perfectly caught the trade moving down. Now, of course, it was a good sell-off, and with good sell-offs come good volatility, right? So when there's an uptick in volatility, the signal right here, the yellow line, will actually track the price really, really nice. And the moment the price crosses, which was right here at the 1:03 p.m. mark, the trade is over. There's nothing else left in the trade. You can successfully use this way. Whenever you see a sell-off and price crosses this yellow line, such as it did right there, that'll mark the end of the trade for you right there. Likewise, this purple line does the same thing, but it's not adjusted for volatility. That's the difference between the purple line and the yellow line. Okay, purple line will track the price tightly right there, and the same concept applies. The moment that price crosses the purple line, the trade is over. Now, how can we tell whether there's an uptick in volume great enough for us to take the trade and go in? This yellow line down here tracks volume, okay? The moment it touches the zero line, that indicates that there's going to be an uptick in volume, such as what happened here at 12:50 p.m. today. Okay, this uptick in volume right there corresponded with the sell-off. Will also correspond with an uptick as well. So regardless whether the price is going down or up, an uptick in volume crossing the zero line, crossing over the zero line, will indicate that that might be a good point to get into your trade right here. Okay, this signal here, moving on to this one, actually tracks two different components, two different data streams. It tracks the QQQ, and it also tracks the SQQQ, the inverse of the QQQ, okay? And that's what it's plotting for you right there. So this would have been your entry, and bang, that would have been your exit right there if you were following this specific signal right here. Now, as you guys know, people use the SQQQ as a hedging mechanism whenever they place bets in the QQQ. So wouldn't it be nice to have an indicator that actually tracked both the inverse movement of the QQQ as opposed, in relation to the QQQ? That's exactly what this does right here. Okay, boom, 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 pow, perfectly nailed the downside for you right there. Now, this indicator right here, it says stochastic, but it's not your average run-of-the-mill stochastic RSI or anything like that that you would find at your broker-dealer. This has some very specific features under the hood, such as a finite infinite response filter that only tracks a certain amount of historical data, which allows for us to have a more accurate representation of the turning points in the current data that you're looking at in the spectrum. Okay, so that's a mouthful. So let's just look at the indicator and see how it works. Here, for example, whenever it is over the green line, and I'm going to make this as simple as possible, okay? If you're here and you're thinking of taking a long trade, do not take a long trade, because this is exactly what this is telling you, is that the price has really topped out and there's going to be a reversal in price, okay? You wouldn't want to take a long trade here. This is where you're looking to take a short trade right there, okay? And if you would have taken a short trade right here, you would have caught the beginning of the downtrend up here, okay? You would have taken this bad boy all the way down. This solid white line here is the zero line, okay? And the moment you would have gotten to the lower threshold over here, you would have continued, all the way to the blue line, hit the zero line. That would have been the absolute end of your trade right there. And if you notice, a lot of these kind of converge right around the same area right there. Look at this. Boom. This bad boy right there. So that's the way you apply this, okay? You look at the extremes, both the top and the bottom, okay, to help you decide when to get into the potential trade. You look at your volume, because without there being good volume, is there any point in taking a trade only to watch it go sideways or watch it go against you? No, you want to wait and you want to make sure that there's sufficient volume, measured by this right here, okay? This other indicator also serves just as confirmation. It's really just here for confirmation, okay? Whenever the angle here falls below the zero line, well, actually this is a 90% mark over here, okay? That is a signal to go short. As long as it's below the zero line right here, this indicator will remain short, okay? And as you noticed right here, it crossed the zero line. That was the end of the trade right there. Now, we had another little bit of a sell-off a little while ago this afternoon. Let's see how that shook out, okay? Again, this sell-off was distinct from the one we had earlier in that it was a little bit of a pullback, but it wasn't accompanied by enough volatility for the pullback to have continued all the way down. Now, it was just a pullback, and then boom, it slinkied right back up. Now, if you notice, the volatility meter here, the yellow line, didn't trace the price, okay? And that's because it was a low volatility sell-off. A little bit of a low volatility sell-off right there. Purple line did track it, because remember, the purple line isn't subject to volatility adjustments right there. The moment price crossed the purple line right there, that would have been your exit point right there. Similarly, you could have taken this right here and bang, gotten out right there. Likewise, you could have taken the stochastic down here at the bottom, and the moment it touched or crossed the zero line, you could have gotten out of your trade right there. Same thing with this, and if you noticed, here, volume actually picked up right around this bar right there. Okay, that's where your volume picked up right there, and it continued to stay high all the way till the reversal ended over here. Now, that's on the cues for the 1 minute chart. Let's see how this all shakes out when looking at the NQ over here. Now, this is a 30-second chart of the NQ. The reason why you use a 30-second chart is because there are 2 more bars in the 1 minute chart than there obviously are in the 30-second. And you use the 30-second to really pinpoint your entry and exit, your exits. And I have a similar stochastic, but I've got a few other moving parts over here. Okay, these this white line and this purple line track the long-term cycle of the NASDAQ 100 in the 30-second chart. Okay, and when I'm talking the long-term cycle, I'm talking over 200 bars. Okay, the blue line right here just tells you which direction the market is headed. So if price is below the blue line, the market's heading down. If it's above the blue line, market's heading up. It's pretty simple. But if you look at the significance of this, okay, when it's tracking the long-term adjusted value of the price in the NASDAQ 100, anytime the price spectrum hits or touches the purple line, such as it did right here in this case, there's going to be a reversal. There's almost guaranteed going to be a reversal in price right there, and boom, that's exactly what happened. Look, you had the sell-off right there, and again, you've got your volatility adjusted filter right here, and that worked out really, really nice, because the moment that price crossed it right here, your trade was effectively over at that point. Okay, the white line works similarly, in a similar fashion right here. Whenever the white line price touches the white line, you're going to have a reversal invariably, and that's exactly what happened right here. Look at that, boom, price touched, and it just reverted to the downside right there. Now, a couple of other things I just wanted to highlight. This indicator right here, it's also adjusted for volatility, this purple line right here. So the reason you would look at this is when you have extreme movements in price, such as you did earlier on today, when you had the first leg of the sell-off over here. Now, you look at this because when it's at this extreme, it's measured in standard deviations right here. So everything that you see over here, everything from the 0 all the way to the 2, that's measured in standard deviations. So this is 1 standard deviation, 1.5, and 2 standard deviations, just so you can get an idea of the magnitude of the move being made by the price. Okay, chances are that if it crosses the extremes, we're only interested in the extremes in this particular indicator right here. Okay, and this filter, once it crosses the extreme, once it crosses 2 standard deviations and it rolls back right there, that is pretty much the end of the trade. I'm not interested in anything that happens in between the 2 standard deviations. I'm only interested in where price falls outside of 2 standard deviations relative to where price is moving, and where is that going to end, such as it did right there. Look at that. That was the beginning of your trade. That was the end of your trade. A perfect exit for you right there. And if this is too much, you might want to go simple, and you can use the stochastic right here. Okay, if you were thinking of going long over here, it was a bad choice because price reverted and it went down, and you could have taken this bad boy all the way down, and the moment it crossed the 0 line and touched your 0 line over here, okay, I'm sorry, the moment it went below the threshold and got to your 0 line, your trade would have been over, guys. That's it. That's the power of having these tools in your arsenal, to be able to avoid bad entries, to be able to time your exits, and to be able to make overall better trading decisions in what you do. Now, both of these charts, this one and this one over here, are going to be made available in the first half hour of trading. Okay, if you want to have them made available throughout the course of your day so that you don't miss sell-offs like we had today. For example, today we've had 2 very nice trades. We had this one right here, and there was another one right here. We had this one over here. Okay, these are going to be made available for subscription after the 10 o'clock hour. I will be providing commentary every day for the first half hour. After the first half hour is over, I'll provide commentary on what shook down with the markets. I'll post those videos. You guys could watch them. But anything after 10 a.m., guys, if you guys want to subscribe to something like this, I'll make the link available for you to do so. That's all I've got for you today. I hope this brings value to you as much as it does to me. You guys know, guys, that I'm not here to make 10 or 20 points on every trade. You know, I'm known to make several hundred points on trades. These are some of the tools that I use. I'm making them available to you. I hope you guys take advantage of using them. And that's all I've got for you today. Happy trading.